Well, I also think it's almost like a marriage in that you go through a honeymoon phase. So, when you're starting a nonprofit and you're doing such great things, you're like, no one's going to sue us. Nothing's going to happen. Our new employee isn't going to sue us for wage and hour. Why would they do that? They believe in the mission so much. And I think that's what I see a lot is that there's like this emotional connection that everyone has to their nonprofit organizations. But at the end of the day, when things go south, things go south. And they're not going to go light on you because you're a nonprofit organization. They, that employee that's disgruntled is still going to sue you for harassment or, things of that sort.
You're listening to the Nonprofit Counsel podcast with host May Harris.
I'm May Harris, and I'm the host of the Nonprofit Counsel podcast that I've established primarily to provide counsel to nonprofit organizations because that's what they need the most. And today, my guest is Bill Brennan, who is with CMR Risk and Insurance Services. You're a principal there. So welcome to the Nonprofit Counsel podcast, Bill.
Thank you, May. It's good to be on. I appreciate you inviting me.
My pleasure. Well, we've kind of done things like this in the past, little video things here and there, and you were the host the last time, so it's my pleasure to be the host this time.
Role reversal.
Right? Okay, well, tell me a little bit about what it's like being a principal at a big insurance company.
I don't know how exciting it is, but, our company is pretty unique in that we fill a space in the market in which we're fairly large and private. So most of our competitors are going to be, public companies or very large firms. So we are, serving that middle market niche. A lot of them are nonprofit. That's why we're connected. But what's it like to be a principal at a firm like this? It's great because you're able to really influence decisions and help clients and make change quickly and be entrepreneurial. So it's, as an owner in this firm, it's just been a lot of fun, and I'm loving the ability to help my clients and contacts in the community.
Well, and so that's one reason why I wanted you to say that, because nonprofits are not all the same. They're not cookie cutter, and the solutions that they require are not cookie cutter. So tell me a little bit about how you serve nonprofit clients in particular.
Yeah, exactly right. I mean, I think one of my mentors and clients actually is a large nonprofit here in town in San Diego. And, he always says nonprofit is all it is a tax status at the end of the day. And you're still running a business. You still have major operations. And I think there's a lot of unique challenges and issues associated with nonprofits. But at the same time, it is still running a business. And it does take a special knowledge, certainly from our perspective, an insurance perspective, because each nonprofit is different, and you have to understand the risk, but then you also have to understand just kind of the business environment and what they're dealing with, and treating them like you would a private or for-profit enterprise. So having that knowledge and experience is really important.
Right. So I would agree with your mentor in one respect. You have to operate a nonprofit organization like any other business, right? But you don't have shareholders and sometimes real decision makers, like in a business. In a nonprofit, you might have a kind of diverse decision-making group, the board of directors, et cetera, lots of stakeholders. So sometimes I feel like it's herding cats a little bit, where our social enterprise clients, where you've got a founder and a very, tight startup you can make decisions a lot faster. But with nonprofits, sometimes you run into, I don't know, a little bit of a diverse decision-making group. I'll just put it that way. So as, nonprofits grow, their needs change, just like in a business, their needs change. So typically, what are the first kind of needs that you see nonprofits requiring in the insurance space, for example?
Backtracking just a little bit, I do appreciate what you said about all the different decision makers. I mean, that is, nonprofits have a lot of the same issues as a for-profit, but then they also have a lot of issues they don't. And I think this kind of piggybacks on what you said. There's a lot of stakeholders in a nonprofit, not necessarily shareholders. And it's people that don't necessarily have a financial interest but are very involved. So it can be challenging to herd all of them, like you said. So I totally agree with that. And I think to answer the question here, as a nonprofit grows, they have to start thinking more like a business and manage a lot of these stakeholders or personalities at the same time. And it can be challenging because you have, these very passionate founders that can build a nonprofit from a startup, very cause driven, but then they have real problems. They have real budget issues, employment issues, HR issues, litigation issues, and just general risk that, isn't necessarily in their forefront when they create these nonprofit. And
I would say it's never in their mind and in their psyche.
That's exactly right. So part of our job is just educating them and taking on that role to kind of be their outsourced risk manager, because a lot of nonprofits are running lean and don't have the personnel and don't necessarily even understand their exposure as they grow.
Right. And there's significant risk as they grow and, but not necessarily significant resources. They're not venture funded, they don't have deep pockets like some businesses do. So, when I'm advising clients, it's wonderful to say, well, best case scenario, considering what you're doing, you should mitigate this risk and this risk through this insurance and this, employment through EPLI and, but very rarely are the resources there to do it. So, I typically have to say, okay, well, the biggest risk perhaps, in my opinion, would be just general liability. Let's get that policy in place first. And then we can talk about directors and officers. And then we can talk about, employment practices, liability insurance. And then we can talk about, other things like that. Is that kind of the progress that you kind of see with nonprofit organizations?
Yeah, I think you're pretty spot on. I mean, there's generally a starting point with a basic insurance program. They usually are procuring insurance at the start, and it's kind of a mad rush. They don't really understand it. It's either a requirement from a municipality or a government agency or a lease. So they just kind of do a bare bones approach. And then, you start to build upon it and educate them on the different coverages and issues and exposures. And certainly as they grow, it starts to become more significant. But it is kind of a building block approach, like you said.
It kind of has to be. Yeah. So how important is that kind of conversation to have with someone that knows about nonprofit risk? How soon should they be talking to someone like you?
I mean, really from the start,
I know. Same thing about being a lawyer. Like, when should I talk to you? From the beginning? Yeah, exactly.
I think aligning yourself with the right partners is really important. Now, the type of program they put in place will mature. They will buy more coverage or implement more risk management as the nonprofit grows. But generally, you want to have an expert or a professional that understands your space. The problem with nonprofits is when they're very small, they're not going to get attention from a lot of brokers or vendors or lawyers. You're not going to get the folks that maybe are going to give them the best attention. So it's kind of it's a tough situation for them because they might not get the best vendors initially because they're not on anybody's radar, or not, if that makes sense.
It makes perfect sense. For a lot of the startups that come to us, I refer them to Cal nonprofits because they're set up for those small, just getting started, just need a basic policy. But as they grow, I think it's important not necessarily to think that way. Like, how can I encourage my mid-sized to larger clients to, reach out to professionals and start building a relationship, right, with a professional that can really know how they operate. Because otherwise you can't really advise on the risk if you don't really know what they're doing. So, and for those little guys, that don't necessarily have any employees, they don't need employment practices liability insurance.
Right.
But I would say I do highly recommend in my line of work, directors and officers liability insurance. So it's like an errors and omissions policy for, directors of boards. It seems to me that that's typically one of the first insurance coverages that boards are very happy that they have. Would you say the same? in that regard?
Yeah, I think the two biggest coverages that are usually missed early on in a nonprofit are going to be the directors and officers, which, is protecting the board and all D's and O's that are, in the organization. And then second, professional liability related exposures. Every nonprofit is different, but, especially, nonprofits that are maybe engaged in kind of social welfare related projects have a pretty significant professional exposure, and, or, even nonprofits that are getting big grants and donations and are, obligated to execute on their mission. These are professional exposures. And again, these are very complicated coverages and require a great deal of understanding of the exposure. And that's kind of, that's the next level insurance that, when from startup to kind of you're building into a more robust business. And I see those coverages either misplaced or not placed very often when, you're going from that $1 million budget to $5 million budget, let's say, in a nonprofit. And it's totally unique to each one. And you have to understand it and present it appropriately to the marketplace so the carriers are underwriting and providing the coverage. And that tends to be missed if you don't specialize in this space.
So what are the, kind of consequences of missing something like that? What kind of issues have you seen happen because they did it incorrectly or didn't have that type of coverage?
I mean, in a worst case scenario, it would lead to insolvency if you were if you had a major kind of third party suit that fell in one of those two lines, those two areas. It can put the nonprofit out of business, and then it can also put the D's and O's at significant personal risk. It's hard to speak in generalities like you touched on in the beginning, because every nonprofit is, a foster care nonprofit is different than a cancer treatment nonprofit, but generally they have this similar kind of exposure for the D's and O's and then the delivery of what their mission is from a professional standpoint. And it's financial and typically it's financial in nature in terms of the loss. So can they sustain it from their financial standpoint? Are the D's and O's affected? Are is the insurance, are the limits high enough? Is the insurance applicable enough? Right. So the consequences can be severe.
Right. And, from my background as an attorney practicing in this space, board members are required to, they have a fiduciary duty to the organization to protect the assets, to ensure that the activities are, and the financial resources of the nonprofit are adequately protected. And insurance is one of the biggest things. You can do a lot of contractually through indemnification and those kinds of things, but insurance is massively important. I think it's often overlooked. So go ahead.
I mean, it's an expense. And it's something that's not used a lot and it's misunderstood. And you're right. It's just not, it tends to be a lower priority. So it's a challenge, especially when you're in the growth phase and you don't have a lot of discretionary funds.
Well, I also think it's almost like a marriage in that you go through a honeymoon phase. So, when you're starting a nonprofit and you're doing such great things, you're like, no one's going to sue us. Nothing's going to happen. Our new employee isn't going to sue us for wage and hour. Why would they do that? They believe in the mission so much. And I think that's what I see a lot is that there's like this emotional, connection that everyone has to their nonprofit organizations. But at the end of the day, when things go south, things go south, and they're not going to go light on you because you're a nonprofit organization. They, that employee that's disgruntled is still going to sue you for harassment or, things of that sort. So I think it's realizing as a board member that you have this fiduciary duty and that one of the best ways that you can mitigate that risk is through insurance. So, and to that point, I was going to ask you, you sit on a nonprofit board or two, do you not?
Correct. At any given time in the last 20 years, I've been on a board or two. So I've always been very engaged in the nonprofit community. It's just been just a part of my career and really philosophy and giving back. So I'd like to think I bring that perspective too. Like I understand what's happening on the board level and understand the exposure. So certainly when I'm on a board, I wouldn't join if the proper insurance wasn't in place.
Right.
Because it's risk. It's high risk.
Right. I remember when I was serving on boards, one of the first questions I was asked when I was, nominated was, okay, can you supply a copy of the D&O policy and declaration page? I want to make sure that I'm protected. And my firm practices litigation quite a lot. And it's so interesting how, they'll let that policy writer or that policy lapse because we never used it. We haven't used it for 5 years, right? And then they let it lapse, and that's when something comes up. It happens almost all the time.
That way.
Yeah.
I shouldn't laugh, but who likes insurance? I mean, it's not, if you're using insurance, something bad's happened typically. So it's not something people want to spend a lot of time and energy on, or even think is going to occur. So, that it does be, if you've never had claims and everything's been kind of, positive and there's been no negative consequences, insurance starts to become less important for the decision makers.
Right. But when you're sitting in that board seat and you sit on boards and you're looking at, P&Ls and financial statements and can we afford this? How often is it that you think that, oh, well, we haven't ever had a claim. Why don't we get rid of insurance as that line item so, we can bring it up into the black? I've seen that a lot. Right. Like that's one of the first things that seems to go, and it seems like it shouldn't be, in my opinion, as an attorney. But what do you see?
Yeah, I know. I think the attorney and insurance person are going to say that's one of the last things you should cut. But, I don't know if I see that often where insurance gets cut.
I think it's in the little guys. The little guys, not
certainly on the larger nonprofits. I don't see that. I think what I do see, and this is. Boards can be made up of, a totally vast group, different type of group of people, and some are really engaged, some aren't. If the governance fails or the nonprofit is sued for mismanagement of some kind, and the board was negligent in that process, it's really important to have that coverage, and you have control of some of that risk, and some of that risk you don't have control of, and I've not seen a nonprofit with any kind of size cut those kind of coverages. It's just too critical.
No, I think medium to large, they keep it. It's the small guys that tend to, unfortunately, cut it. And then they're the ones that need it actually the most. They don't have the deep pockets of the large guys.
That's true too. And they probably don't have the sophisticated board and or operators.
No. And they're typically still run by a founder, and then they're the ones that end up causing a board dispute, which then rises to the level of needing some kind of D&O sometimes as well. Okay. So we've covered general liability, D&O. Let's talk about employment practices liability insurance a little bit. It comes up a lot in my practice, the need for it. I think it's probably one of the biggest areas of risk for any business or nonprofit, especially in the state of California. So what would you recommend small, medium, large nonprofits look for when they're looking for coverage, when they start hiring people to complete their program, work in their rescue, work in their foster home? What would you recommend there?
Recommend in terms of the coverage or the process, the risk management process?
Both. Let's do both. They go hand in hand.
They certainly go hand in hand. I think generally, just to back up, employment, the employment risk for a nonprofit, I would argue is as big or bigger than any of the other exposures we've talked about. D&O, professional liability, property insurance. That has a lot to do with a couple of things you've alluded to. A lot of the employees or the founders, they get into these nonprofits because they're so passionate about it. And it's this passion-driven, mission-driven. And all the employees come on and there's kind of this kumbaya culture, which is really amazing, which is what I love about nonprofits. But at the same time, You tend to have employees that maybe are that they're certainly lower paid than the private marketplace, which presents itself with more exposure. You tend to, like you said, as they grow, have maybe less policies and procedures and sophisticated corporate staff. So the risk management isn't there. So the exposure for work comp claims, discrimination claims, harassment claims, wrongful termination claims is significant. And you really, we see, I probably get a claim or a lawsuit a week for these kind of scenarios because it's so prevalent. And I think the employee base in this class of business just tends to be a little more litigious for the reasons I just mentioned. So it's hugely important. So number one, buying these policies are super important because that's cheaper and easier than hiring a big corporate staff. Number two is making sure you're aligning with the right partners, like your law firm or a good insurance broker. So you have those vendors and partners that can start to implement, or at least provide you counsel on the steps you should take. And then three, investing internally in the kind of risk management related resources, HR and compliance, to implement a lot of these policies and procedures to kind of mitigate claims. But that's how I would recommend the process move. And, the policies, believe it or not, are relatively cheap for startups and smaller nonprofits. They get much larger and more expensive with really high deductibles. You've probably seen that as when you defend.
Yes.
So it's something you got to, it's a huge business exposure. And I would say nonprofits, again, depending on what they do and the class of employees, just they have a higher exposure. Yeah, we see more claims in that regard or in that class of business than others.
I would agree with that. I also think that in the nonprofit kind of sector, there's a overarching willingness to think that you can choose if your worker is an employee or an independent contractor. It's like, oh, I don't know how many nonprofits I've talked to are like, oh, well, we've chosen to pay them as an independent contractor because they asked us to, or that, it's cheaper. So, and we're a nonprofit, we don't have a lot of money. So we're going to classify that worker as an independent contractor. And in California, it doesn't matter what the contractor / employee worker wants to be paid or how. Uber was a perfect example of that, the rideshare apps. And it really doesn't matter if it's cheaper. In fact, that's why you shouldn't be doing it. The IRS and the state, they want their little share of those payroll taxes. So, and then you were like, well, I've heard this too. Well, they'll never sue us. They believe in us. They have that wonderful mission-driven, idea. When things go south, if they have a cause to sue, they will. And in that regard, that's improper classification. So opens you up to employment law liability. It also opens you up to liability with the Internal Revenue Service and the Franchise Tax Board. So not only are you now on the line to the employee, which they're an employee whether you like it or not, whether you call them an independent contractor or not, but now you also have to explain that whistleblower complaint to the Internal Revenue Service. So I agree with you 100% that employment is the number one area of risk that can be mitigated in most circumstances.
Yeah, I mean, all of those scenarios you described are covered under insurance, with the exception of maybe the kind of the regulatory fines and penalties. But yeah, you see it all the time, the 1099 or independent contractor status, when under the, the definition of employment, it does, they'll be treated as employees, and the kind of the legal exposure is still the same. And, insurance does cover these kind of scenarios, but the reality is if they do it, that's where the risk management comes in. That's where you come in. That's where we come in. So we can explain the exposure they're putting their nonprofit at risk by kind of not taking a more holistic approach to the policy procedure, I guess, is probably a better way to say it.
And then if you wind it all the way back to something you said, which is that in many cases, nonprofits have even greater exposure than businesses. A perfect example of that is those regulatory penalties that you were just talking that, would be as a result of this poor classification. In a business, you can pay them through the business, fine, penalties, pay it, right? But in a nonprofit 501c3 kind of standing, you can't use charitable assets to pay those kinds of fines. You have to, they're on the board to come up, because they're the ones who are in the fiduciary relationship to come up to pay those fines. So again, that's even higher of a potential risk in the nonprofit 501c3 setting, at least, that you wouldn't have in a normal business. So it's a triple whammy. Is that even a thing?
Yeah, you're exactly right. There is more regulatory exposure for a nonprofit, certainly, with less ability, with less resources to pay.
Right.
Yeah.
So, where a little ounce of prevention is equal to way more than a pound of cure, I think we're on the same page with, good, talking to professionals, understanding, it isn't just, oh, sure, I'll sit on a nonprofit board. How hard can that be? Well, the answer is it's very difficult. You should take it seriously, even if it's a small little nonprofit. They have the same kind of regulatory requirements as the Mayo Clinics of the world, the big nonprofits with less resources. So utilize the resources that are available to you. So what type of resources does CMR offer to nonprofit clients? Besides, do you have any guides? Do you have any resources that you provide?
Yeah, great question. So we have a lot of different avenues we help our clients, between webinars and education pieces and white papers and just kind of the general education process of placing policies. But we also have a fully functioning kind of risk management division that includes HR consulting, kind of loss control, claims management, workers' compensation, safety and health management, where we just really invest in resources that are there for our clients to, pull from. So again, every nonprofit's different, every business is different, but we try to have enough resources on staff to provide content, but also kind of specifically deal with projects. So to that point, when a nonprofit's starting to grow, we're really able to help them do everything from aligning them with proper labor attorneys and building their injury and illness prevention program, giving them instruction on how to handle a claim, aligning, HR compliance, things of that nature that really help them. And I think that's, again, where I think we're unique in our private ownership structure is we have a lot of flexibility around these resources. And we either do it in-house or we partner with external folks like your firm, to line things up.
Well, wonderful. Is there anything else that you would like to share with the audience of the Nonprofit Counsel podcast? Besides the fact that you're currently enjoying yourself in Park City, hopefully getting lots of skiing in.
Yeah, exactly. No, I really appreciate you inviting me. I think, like I alluded to, I think nonprofits, there's like we talked about in the whole podcast here, there's a lot of exposure. And I think, people love nonprofits because there's a lot of feel good. There's a lot of passion around it. But, you have to align yourself with partners at every level and protect your, what you've built, because there's a lot of exposure. And it can bring down nonprofits. So whether you're joining a board or you're running a nonprofit, you have to take the compliance and risk management very serious.
Right. And I think it's kind of like Debbie Downer when you're starting a nonprofit or you're engaged and you've just joined a nonprofit and they're doing such great things. And then you talk to the lawyer and the insurance, company, and it's like, well, we have to look at this from a worst case scenario. What can absolutely go horribly wrong? And how can, I help contract around it? And how can Bill and his company help mitigate against that risk? But you can't just ignore it as much as you'd like to, right?
Right.
As much as you like to say, no one's going to sue a nonprofit. No one's going to be upset, that, this dog rescue didn't do what it was supposed to. Yeah, that's when you bring emotions into it, which we've already established nonprofits are full of emotion,
Mhm.
that's actually where I think the bigger risk is. If people were truly, analytical and it was just, McDonald's maybe, or, Starbucks, you're not as emotionally invested on, that type of entity. But this, especially in board disputes, we get them a lot. And you've got two factions of very passionate people that will fight to the death. Where in a business, you'll have a separation, a partnership, breakup. They'll negotiate it and move on. It's so different in nonprofits.
You memorialized it better than I did in 30 minutes of talking. I agree.
I don't know about that. I've just seen it a lot.
No, yeah. I also think one thing you said that's really important is the ounce of prevention is worth the pound of cure, and that is maybe that's the biggest takeaway from at least an insurance and risk management standpoint. It's the least fun, the least sexy part of the business, but it's a little bit of upfront risk management will save a whole lot of pain later. Time,
energy, money, and maybe the organization itself. Because At the very beginning, you say, well, worst case scenario is insolvency, and nonprofits go bankrupt just as often, if not more often, than businesses do. So Good point there.
Right.
Okay. Well, thank you so much, Bill, for joining me on your vacation and taking the time to talk this sexy, topic of law and insurance and risk management. I truly appreciate it. Thank you.
Thank you so much. Thank you for having me.
Thank you for listening to the Nonprofit Counsel podcast. Are you ready to lead with clarity and confidence? Head to nonprofitcounsel.com to find the tools you need to start smart, lead strong, and create lasting impact.